Hello, everybody. Welcome back for another video. Hope you're all doing well. Hope that everyone out there is doing absolutely fantastic and that you're all having a great day. Do not forget to follow me on social media. There are links in the description below the video in the little box that you see. Very big thank you to everyone out there who leaves a like and who comments on the video as well. It is very much appreciated. And without any further ado, let's jump right into it. We have a lot of kind of news today, or at least this is a little bit how it feels. We have had a steady line of information and news as of late as to which coins people love, where their prices are going to go. Years ago, and I guess maybe it was just the timing of things, we used to have a lot more news about like how much of something should be allocated. I think a lot of times news like that was kind of geared towards people who have like $100 million. That's not a joke either. Remember, we used to, so this is 3 years ago at this point, 2-3 years ago, there was a news story that everyone was like, oh my gosh, can't believe it. It was something from BlackRock, and they announced to their associates, to their customers, how much crypto and Bitcoin these people should be allocating to their portfolio. A lot of the numbers that we heard before tended to rest around, 0.1% of a portfolio, potentially 0.5%. And I think it was, once again, this was like right before we got the Bitcoin ETFs. And I think the number was like 60, 70, or 80%. It was some like egregiously high number. This was also when Bitcoin was still like at 14,000. So I guess the numbers do make a lot of sense. But even then, the information was like, if you have $100 million to spare, here's how to allocate your money. The average person doesn't even have $1 million. So sometimes news like this was like, oh, okay, they're like really out of touch. I guess that makes a lot of sense. This was popular news. It wasn't unpopular by any means. One of the analysts here is also quite well known within the space. He's made a lot of calls, if you will, over the years as far as Bitcoin's price, where things are going to go, what this drop in price means, what happens when we move up by 12%. That whole little shebang. Having spent more than 50 years trading on global markets, his name is Peter Brandt, has laid out what he calls the cleanest way forward for anyone looking to build real wealth instead of chasing quick wins. Yeah, so one of the other, if you weren't here recently, one of the other videos, I was a ranting and a raving because I'm seeing it pop up again. I understand excitement when prices move up. I understand things look amazing when, you see green everywhere and, prices have gone up by 3, 4, 5, 6, 7, 8, 9, 10, 11, 12%. But the problem is, the real problem at the core is that a lot of people are in crypto for very quick gains. I am not here. I've exhausted myself. I'm not here to try and convince you. I'm not here to try and get you into crypto or to even hold on to your assets, what have you. But understand that asset prices continuously go up because of inflation. The people who are going to benefit the most are those who buy the assets and then hold on to them. It's not just, don't confuse, every other asset with like real estate and not. Like the name of the game is always, you buy stocks, you hold on to them. They produce dividends. You swap those dividends back into more stocks and you keep the train rolling. Same exact thing for real estate. You buy and you hold. Crypto is also a buy and a hold. A lot of people are just here for fast money. I sincerely wish you the best of luck. Like, really, this is why when we talk about the incentive of being able to just hold crypto and then stake it, and you make passive income from that. And for those of you who just folded your arms and said, well, that passive income isn't enough, it's once again because you're thinking in very short terms. You're thinking of, the $28 that you would make over the course of a week, as opposed to realizing that asset prices and cryptocurrency prices are expected to 10, 20, 30, 40x over the course of the next few years. You're not understanding that the accumulation will lead up to more. If you have $1 one day and you save $1 every single day, gosh darn it, you have $365. If you do this over the course of multiple years, you got a lot of money, more than you would have had in one day. If you put away $10 or $100, of course it goes exponential. His formula is straightforward. Here we go. He said invest 10% in Bitcoin, 20% in real estate, and 70% into the S&P 500, basically into the stock market. Reinvesting every payday without overthinking. Without overthinking. There's always this really weird thing where people who get into markets, it's not, and I think it's a little bit more than overthinking. Everyone panics. Whenever I tell people or told people before, I mainly only talk to you guys now about money and stuff. A lot of people are very interesting when you bring up money or that they should be saving or investing. Whenever you bring it up money with a lot of people, they tend to like hyper overanalyze. And this is when I tell people to get into markets, I often tell them, put $100 into the market for the year. They go, that's it? I'm like, that's it. Because everyone has this idea. You go into the market, you become a day trader, you buy 3 curved computer screens and you put on your glasses and you sit there all day. No, put $100 into the market for 1 year so that you can wake up and you can look at your portfolio and you can look at the news and you can see that, your portfolio went down by 6%. By the time you get to summer, you see it's at $112, went back up a little bit. You have to be able to like deal with these movements up and down. I've had people tell me like, thank you. Like, it helped out a lot because on the days when prices went down, they panicked, but then they realized, oh, only have 100 in the market. On the flip side, when prices go back up and they see that they could have made a lot more money, they get into the mood and they understand the actual market dynamics. I used to tell people before, you have 10,000 saved, put 5,000 into the market. Things would fall by 4%, and these people would panic, call me at 3 o'clock. And I saw the market went down. What should I do? Just calm down. No. I saw on the news it might go down further. So a lot of people get into the space and they don't really understand this entire long like people don't get long-term hold. How many times have we gone over that in this year and every other year? A lot of people get into crypto because they think it's fast, easy money. People get into real estate and don't realize that there are downturns. Sometimes a couple of years might be a bit brutal, depending on what interest rates are like, depending on how things are. The same exact thing with the stock market. When you extrapolate and you pull that line out and you see that over the course of a 7-year period, prices definitely went up. No one mentions the year and a half where ooh, prices are just kind of going sideways and they keep going. Okay, they went up, oh, now they're going back down. Yeah, a lot of people, you have to get into the mindset. This is how wealth is created. Wealth isn't created because you threw $13.50 into an altcoin and you think it's going to go to 1.1 million. That's still not wealth. Wealth is created usually over generations. What we have now is a market in front of us that is growing ever more. It's quite abundant in its own manner. And it could potentially produce hundreds of thousands, if not millions of dollars for you as you buy and you hold. So a lot of people over the years, I've seen people write in the comment section, excuse my French, this is the letter B and this is the letter S. I don't understand why the market's not moving. You said things were going to move. And it's like, nope, that's not at all what I said. This is why we go over what the analysts are saying. And then even crazier is that when we do have dips to a $9,000 Bitcoin, these people flee the market. They don't want to be there anymore. Bitcoin goes back up to 47,000. They look at the market. What should I do? Bitcoin goes over 100,000, and then the answer was, well, you probably shouldn't have left the market when it was 9,000. You probably should have bought more. That's usually the way that investing goes. The logic is brutal in its simplicity. Most traders never achieve the figures they dream of because achieving 50% compound growth over any meaningful period is statistically impossible for all but a tiny minority. The most eye-catching element is the 10% Bitcoin allocation. For years, Brent had considered Bitcoin to be the only digital asset that matters, frequently contrasting it with the falling purchasing power of fiat currencies. Adding a fixed Bitcoin allocation alongside equities and property indicates that he has evolved from mere speculation to a fundamental component of long-term wealth preservation. Yeah, what rich people typically do is they typically diversify, and they put their money in different places, not all in one pot. But as I stated before, please, for the love of everlasting goodness, make sure that you do your own research. Figure out why people diversify. Figure out what you might want to diversify into. While crypto has, for all intents and purposes, a seemingly bright future ahead of it, don't forget that other assets exist. Don't forget that you can invest in other things to also make money. Make long-term growth the goal. Make passive income. Assets that produce money on their own. That should be your goal, especially when it comes to the idea of early retirement. There's a rather long article. I don't have to go over more of it. The point that most websites focused on was the idea of the 10% Bitcoin allocation. As I said before, typically, many analysts or investors would typically announce half of 1%, not even a whole percent, half of 1% to put into crypto, into Bitcoin. That number has risen over multiple years. The interesting part, last thought, the interesting part for this is that many people who have allocated 2%, 4%, 10% of crypto into their portfolios, it usually ends up becoming the majority of their portfolio. Yeah, weird, right? Yeah, because the crypto growth and prices and stuff like that tends to overshadow the other assets. So many times that 2% ends up becoming like 14% or 22%. But there was one, what's this guy's? I don't remember his name. One of these Mexican billionaires. He was very popular in the space 2 years ago. He mentioned that he had like a smaller allocation of Bitcoin that he bought years ago. The price went completely insane. And he was like, yeah, it's now like 40% of my portfolio. And I was like, what? That's absolutely insane. Yeah, Peter Brent is often in the news, but I guess this one took people by surprise that Bitcoin has such a large number next to other traditional assets. That's the 10% Bitcoin news. And yeah, let's move on. Also in popular news, who would have thunk it? A recently resurfaced paper from a BlackRock managing director estimated an XRP fair value, apparently is around a 2-digit level. This market is no stranger to XRP price predictions, expectations, where things are supposed to go. This cycle, and I mean this cycle as in like October, November, December, people are expecting still a 10 to 15 US dollar XRP before the year is over. Notably, market commentator All in Crypto, okay, recently called the public's attention to a 2018 paper co-authored by Robert Mitchnick, now BlackRock's head of digital assets, and Stanford economist Susan Athey. The study, released years before the crypto market reached today's trillion-dollar scale, was among the first structured attempts to calculate the fair value of BTC and XRP. It estimated that XRP's fair market value is $32 US. Their model estimated demand by projecting how much people would use each network for payments and how much wealth might actually be held in the assets long term. They divided this projected demand by each asset supply and discounted the numbers back to present day values using the traditional finance methods. Specifically, the framework relied on 8 inputs: expected transaction volumes, average holding time before coins moved, storage demand, total supply, future issuances of locked tokens. Okay, that makes sense. Reserve ratios, discount rates, and the years needed for adoption to stabilize. For Bitcoin, they assumed 18.2 million coins in circulation by maturity and the 12-year adoption timeline. For XRP, they worked with the full 100 billion supply, with 39 billion circulating at the time and the rest locked in escrow, along with the other things that we spoke about. So there's also a rather long article that I'm not going to go completely over because it takes too long to actually go over all of that. So, yeah, once again, this market is quite familiar with these ideas. If you didn't see over the course of, I want to say just the beginning of the end of summer, we were getting a smorgasbord of news about $25,000 Ether, a $1,000 XRP, 1 point something million dollar Bitcoin. The conviction is quite high. It does make sense, of course, as we keep hearing these partnerships, countries buying, mining coins, accumulating these reserves and these treasuries and all of these strategies, if you will. I do assume at some point XRP is going to hit $15. It just makes logical sense. I saw something recently where they were like, analysts were talking over the next few years for Dogecoin, and someone was like, yeah, we're expecting a $3.80 to a $4.20 Dogecoin. And I was like, it makes sense. Dogecoin supply is, anyway, it makes a lot of sense. So for XRP as well, for Bitcoin as well, prices will not always remain where they are. We keep seeing more adoption. $32 does make sense. It's just more of a, like, when, all this adoption, all these, all the stable coin news that we've been getting as well. If you missed that, Ethereum has had the bulk of news referring to anyone, an entity, creating stable coins on top of its network. But XRP is not far behind, especially from what we've been hearing earlier in this year. Yeah, it does. It makes a lot of sense. I'm not disagreeing with any of it. It's just a matter of, when do we actually get there? Okie dokie artichoke. I think that is going to do it for this video. I do hope that you have all enjoyed. I hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope that it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting, and I will most certainly be talking to you all soon. See you.